Old tax regime or new tax regime? The new tax regime is default, so does that mean I won't have a choice? And if it gets chosen for me, how do I shift to the old tax regime? Which deductions should I claim? And how should I plan my taxes if I'm a senior citizen? And I have to manage my returns as well and advance taxes. Hello and welcome to this special broadcast. It's the start of a new financial year, and frankly, it's the best time to get your tax planning out the way because it means lesser headaches down the road. And this is something that a lot of people find a little challenging. What we're going to do on this broadcast is to break down some of those trickier issues so that you can make your decisions with confidence. I'm Mathew. I didn't mention that earlier. Now, let's introduce our guests for the day. We've got Arnav Pandya, founder of Money Edu School, and Arvind Rao, founder of Arvind Rao and Associates. And they're going to answer all of the questions that I have mentioned and a few that I have not yet mentioned. Thank you so much, gentlemen, for taking the time. Now, I'm sure that a lot of people tuning in will be wondering at the start because the new tax regime is the default regime now, which means, as I understand it, that if you do not send an intimation to your employer, the person that pays your salary, then by default, the new tax regime gets chosen for you. Is that something to pay attention to at the start of the financial year? Arvind, I'll start with you.
Sure.
Definitely.
Arvind, I'll start with you.
Yeah, sure. So it is because I think the whole, now we have a year's history available because this is something which was introduced in the last year's budget, making the new regime as the default. So having been through that 1 year, what matters is an individual has to actually go back and check what is the quantum of deductions that they are planning to take from their salary income. If this amount is exceeding 3.5 lakhs, it's at that point where old regime is beneficial for them. So if one of our listeners here is falling in that bracket, and if they don't go and intimate their employer that they want to opt for the old regime, what it might result into is that the TDS that gets deducted per month from their salary will be slightly lower because the new regime will calculate the taxes. My bad. The new regime will calculate the taxes higher, and thereby the TDS deduction will be higher. Of course, when they file their returns, they can still opt for the old regime and claim this refund back. But Alex, my opinion is that it's always better to plan your cash flows better. So if you're able to declare your regime at the start of the year and get more salary in hand monthly, that's always better than trying to claim a refund at the end of the year.
Okay. Arnav, I'll come to you because that 3.5 lakh number is quite an important distinction. Is that something that your calculations are also pointing towards? And I would think the way that I had looked at it is that if you have one of two things, HRA, which is your house rent allowance, which allows you to claim a significant discount, or not discount, but a deduction, or Section 24, in which you're paying the interest on a home loan. And if that is a substantial amount to the extent of 2 lakh, invariably your deductions cross that 3.5 lakh mark. Is that something to bear in mind?
Yes, definitely. So, my calculations come in that same range. It's around 3.7 something.
Sure.
So, let's, for simplification purposes, keep it in that range itself. So, if you look at the deductions which you claim, if you go by the normal Section 80C, Section 80D, plus the other deductions which are there, those won't come or won't go beyond 3 lakhs unless, as you mentioned, you either have a home loan where you are claiming the full 2 lakh deduction under Section 24, or you are claiming the house rent allowance, and that is significant. So the key part here becomes that which are the deductions that you are already claiming and whether the figure goes high enough for you to actually make it beneficial to stay in the old tax regime. And so that becomes the key component of making the decision. And looking at the manner in which you are either spending or what your existing condition is, that itself will give you a very clear idea whether you should opt for the new tax regime or not. And the as far as the salaried is are concerned, what they need to do is that by default, since you are going into the new tax regime, if you want to actually ensure that you stay in the old tax regime, you to give the intimation. Now, you can still change that decision at a later age. Now, why am I saying this? Because as compared to businessmen or professionals, once they have shifted to the new tax regime, they can't come back. That is the main difference. The salaried can keep switching, but those who are having income from business or profession, they cannot do the reverse or come back again.
So
That is the
let me clarify this. If you have been on the old tax regime for a period of time, and then in FY25, that is the financial year that starts today, if you shift to the new regime, you cannot change back. Is that what you're saying, Arnav?
not for, I mean, the salaried can switch back.
No, for professionals.
Yeah, for professionals, if you switched once, you cannot come back.
Okay, fair point. That was actually going to be one of the questions that I was going to ask. Now, one of the aspects that I think the government was intending with the introduction of this new tax regime was simplification. We have talked about a large pool of taxpayers that have this 3.5 lakh calculation, but now incomes are rising. This is India shining, India growing, all of those aspects, right? And you have a lot of people, particularly in a few sectors, that are earning significantly more than others. We're talking about 20 lakh plus, 25 lakh, 30 lakh even. For those people, if you have not a very substantial difference in terms of the net tax outgo, just for simplicity's sake, Arvind, is it more beneficial to choose the new tax regime?
So, I mean, I don't know. I want to go out on the leg, and I think this has been the matter of discussion since a couple of years, that at some point in time, which is unknown today for anyone and everyone, is how close are we to that point where the new regime will be the only regime that will exist? Because I think the intent of the government has been that they want to phase out all the kind of deductions that are available, and keep it and compensate the taxpayers by giving them higher slabs up to which they don't pay. So if you are one of those taxpayers who wants to keep things simple, who doesn't want to engage in a lot of planning around investments or basing investment decisions purely to save tax, then new regime is a good step in that direction. The decision to go with the new regime is a good step, because specifically I say that budget 23, when they revamped the slabs, which you have been displaying on the screens for some time now, the higher tax slabs under new regime are really effective, and they help in substantial tax savings. So I would also say that those people who are joining the workforce or who have joined in the last 2 to 3 years, who have yet to start their investments or tax savings, for them this new regime is a boon as well, because no longer are they now wanting to carry some investments or some insurance baggage just for the sake of doing investments for the sake of tax savings. So for them, new regime is great. And like you mentioned, for people who are in the high tax brackets, unless they are able to have these deduction amounts, then new regime is good for them.
Let's talk about deductions then, gentlemen, and assuming that you are picking the old tax regime, what specifically, Arnav, do you bear in mind when you're choosing these deductions? Because they're something I think that people are fairly familiar with, have been over a period of time. And like Arvind was just pointing out, a lot of people choose to invest, for example, into the equity-linked savings scheme category. That is one of the most popular categories as a result of this. So what are the key points or salient points to bear in mind when you are claiming deductions?
The first thing that you need to take in mind is that what are the existing benefits that you already have. See, what happens for a lot of people is that they already have, say, investments or some contributions where they can get the deduction. So they do not need to invest additionally. For example, I'll uh, give you the case of, say, a salaried person. The contribution to the employees provident fund is allowed under section 80C. So that has to be taken into consideration when you are doing your overall calculation. Similarly, people who have young children and who are paying school fees, the fees is also that allowed as a contribution under section 80C. Similarly, there are lots of people who will have the PPF account running. So that contribution also counts. So all these places where you already have or are already contributing something, those you need to count while you are looking at what is the either the additional amount that you need to plan for or not. Second is that in areas like, say, uh, health insurance, you have to ensure that the structuring or rather the payments which are made are done properly, in the sense that, see, health insurance reduction under section 80D allows you the benefit not only for yourself but also for the premium that you pay for your spouse plus your parents, for which there is an additional limit. So that needs to be taken into consideration, as a need for health insurance is paramount. You are going to have some kind of policy. So how are you structuring the payments and where is the money going from? That becomes crucial for you to claim the deduction. And the other thing is that I would say that people should not go into areas which have, say, multiple year payments which come along with the investment. Why do I say that? Because it is highly unlikely that the old tax regime can continue for a long period of time. The way I look at it is that in the 2024 Lok Sabha elections, the greater the number of seats the NDA gets, the earlier the old tax regime will go.
Okay.
So you do not want to end up in a situation where you have a liability which keeps occurring year after year and suddenly you find that it does not get the tax benefit for which you actually contributed.
That's
So that needs to be taken into consideration.
that's a fair point, but it is not necessarily in the ambit of our conversation on a tax planning show. You are trying to read the political tea leaves to see where things are heading. Of course, you have to bear that in mind as well. We've broadly talked about the old tax regime and the new tax regime and what you need to bear in mind heading into the new financial year. But we haven't spoken about one particular category, which is the senior citizens, and I want to very quickly delve into what they should choose. And if you are a senior citizen, or in fact, if you're watching and you would like to help your parents deal with a situation, then this is something that you should bear in mind. Arvind, I'll come to you. You've looked at that 3.5 lakh number, but there are a little bit of, there's a bit of a difference in terms of the slabs in the new tax regime for senior citizens and in the old tax regime for super senior citizens as well. According to you, based on the maths that you've looked at, what should these individuals bear in mind?
In fact, I think the one of the best part or advantages about new regime is that it is now making life for senior and the super senior citizens very simple. And the reason I say this is because before this new regime got introduced, practically we have seen some senior citizens scampering to make that investment of 1.5 lakh every year purely because tax saving के लिए करना है. So I think one of the biggest beneficiaries under this new regime are senior citizens, because obviously with the increase in the slabs and reduction of the rates as the slabs go higher, all this benefits which results in lower tax liability is now available to senior citizens who do not need to make investments purely for tax saving. And it goes without mentioning that most tax saving investments come with a lock-in, which ranges from 3 years to sometimes as long as 5 or 6 years. So getting their investments locked at an age where there is a lot of uncertainty regarding medical expenses and so on The new regime actually gives a lot of flexibility to senior citizens to now have investments that they can better plan and divert to non-locked in instruments, and at the same time not pay the cost of it by paying higher taxes, because the higher slabs in the new regime actually results in lower taxes for them.
Now, let's move on to another topic, which is advanced taxes. And I just want, Arnav, you to explain the rules that govern advanced taxes. And the reason we're talking about this now is because some people will have missed the bus. And they need to know about the penalties that they could be facing because they have missed the bus. So first, break that down for us. And what are the penalties if you do miss that bus?
So the rules for advanced tax are very simple, that you have to calculate or estimate the income which you are going to earn for the year. Then logically, the tax which arises on this income for the year, you need to pay that tax in installments throughout the year at various quarters, with the dates being 15 June, 15 September, 15 December, and 15 March. Now, the main question is that when do you have to pay the advance tax? Your advance tax liability arises when your tax which has to be paid exceeds 10,000. So, for example, say a person who's a salaried person, for them, for their salary income, they already have TDS taking place. So there will be no extra liability on this. But assume that they have some large investments on which they earn a significant amount of, say, dividends. Dividend is taxable. Now, again, on dividends, once the dividend crosses 5,000, there'll be a 10% TDS on it. But the difference here will arise because if they fall in that 30% tax bracket, the tax on the dividend in this case would be at 30%, but the TDS is only 20%. So that 20% is 10%. So the 20% differential which arises gives rise to a tax which is a shortfall. Now, once that requirement crosses 10,000, you have to pay advance tax. Otherwise, if you don't fulfill this requirement, what will happen is that under section 234, there are several subsections in there. Under at least a couple of them, you will have to start paying interest for each month that you have missed out on. So that calculation itself is complicated, but to just simplify it, if you don't pay the advance tax to the extent which you have to, then interest will start getting levied. And roughly, I mean, you can look at it as 1% per month. So it can be a significant amount if the tax liability is large. So, for example, I mean, if say you have to pay 1 lakh as additional tax on additional income, which you have not done so through advance tax, then that not only that liability is there, but that interest keeps piling up. And this will happen till the time, say, next year, when you actually go to file your return and you pay the self-assessment tax, which is the balance.
Is it compounded?
No, it's not compounded, but that amount keeps climbing.
Sure.
So in that sense,
it's better to clear it. It's better to clear it very quickly. Yes. So that's a point taken.
It's a monthly figure.
Yes. All right. So advanced tax, that's what you need to bear in mind. And while we're at it, we should also talk about what to do about capital gains, because ultimately that is a threshold. We put that up on the screen, that 10,000 rupee mark is when you qualify to pay advanced taxes. So Arvind, there are certain rules that govern setting off of capital gains tax with losses that you make through the year, but not all gains can be set off against all losses, right?
That's correct. So minor correction here, it's not the tax on capital gains that can be set off.
No.
It is the gains per se.
Yes.
So basically you have either a long-term or a short-term gain and losses for each of them. So the way the tax laws work is long-term losses can be offset only against long-term gains, whereas your short-term losses can be offset against long-term losses, long-term gains as well as short-term gains.
I'm going I'm going to ask you to
this is
explain that
regarding-
again. Hold on. So maybe if you can give this with an example, because it's gone a little bit all over the place. So explain it with an example and help us understand what can be set off against what.
So, okay, let's say Alex has long-term gains of 50,000 and has short-term losses of around 20,000 during the year. Now, although they are under different categories, but Alex can offset this 20,000 loss against the gains of 50,000, which is there in the long term, and then pay tax at whatever is the applicable rate on these long-term gains. However, if it's the reverse case, wherein Alex has 50,000 of short-term gains and 20,000 of long-term capital losses, he cannot adjust this 20,000 against the 50,000 of short-term gains, which means he has to pay tax on the entire short-term capital gains of 50,000. So next question would be, what does he do with this losses of 20,000, which he has not been able to set off against any gains? He can carry this forward for to be set off against gains to be made in the future years. The maximum amount of years that Alex can carry forward this loss is a period of 8 years.
Answers the question perfectly. There's one more aspect that I wanted to delve into, which is for professionals, which incidentally not a group that we speak about very often. But there is what I was reading as section 44 ADA. Arnav, this one's for you, where you're talking about the presumptive taxation scheme, and income up to 75 lakhs is what you categorize in this. However, if your income or 5% of the receivables, as I understand it, are in cash, then that ceiling falls to 50 lakh. Can you explain the details of this and how to claim this?
See, the logic of this entire section is very simple, that professionals, for them, when you calculate tax, it's not just the receipts which matter, but it's the final profit which you make, which is receipts minus expenditure.
Okay.
Now, maintaining books of accounts, doing all the accounting work can become a bit tedious or rather time consuming. So the income tax has this provision whereby if you fall under this particular section and you qualify, then what you can do is you can take a flat 50% of the receipts as your expenditure and pay tax on the remaining one. So there are limits for which you qualify for this, because again what happens is that if you have a professional with very high income, then this clause is not applicable for you. The only thing here is that, again, if you want to qualify for this particular clause, you need to have receipts which are through the banking system. So you can't say that I, for example, got 40 lakhs as receipts and virtually say 90% of them are in cash and then I claim this benefit, because then the income tax department cannot verify where your income is coming from and how you are generating this. So
Right.
to prevent that, they have this 5% cash limit. The other point is also that, see, if you have an income which is higher than this particular limit, what you can, and you want to say claim a lower percentage of expense as your actual profits, then what you need to do is that you need to get the accounts audited, so that then there is the auditor's report and all is taken as proof of the fact that the figures that you have shown are correct. So in simple words, what happens is that this allows you to just take a certain percentage of your income as profits, pay tax on it, and end the matter without having to keep all those vouchers records, though you need to keep some details in case there is an intimation from the income tax department.
Absolutely. Gentlemen, I think we've covered all of the bases, but what I will tell our viewers is that in case they have any questions, they can write to us and we'll try and get them answered over the course of the coming weeks. But thank you so much for joining in and for having this conversation with us. Viewers, that brings us to the end of this particular edition of the Tax Planning Show. Do stay tuned. Lots more coming up on NDTV Profit.